Assalamu alaikum. How are you, my friends, my students? Today we are going to solve June 2020. I will give it 3 seconds. 6 question into 2. Subscribe my channel. Or the main thing is the objective of this channel is to provide students a platform where they can get help by solving past papers. And if you need anything you want to ask, I'm ready to help you. Let's see your paper today. Now see, class. First we'll see the insert of question number May June 2020, paper 32, 3 hours paper. Okay. The statement of financial position of PPLC at 31st December response to 2018-2019. Okay. Assets, non-current assets, current assets, equities, non-current liabilities, current liabilities, total equities, and liabilities. Other papers 2018 and 2019. The following information relating to the year 31st December are also available. Okay. State the usefulness of a statement of cash flow to potential shareholders. Now, you see, potential shareholders are those who have not yet invested in the company or who might be willing to buy share of this company. So, how cash flow statement would help them? They would know the actual generation of cash in the company, actual cash flow of the company, actual liquidity of the company, position of the company. The cash flow can help in so many ways. Okay. Now, calculate the profit from operations for the year ended 31st December 2019. This is required B. So what we have to do, we have to start over here with profit from operations. Now, what we have to do, retained earnings at end means 31st December 2019. Amount is how much? Amount is 61,700. Okay. Now what we have to do? We have to add dividend over here. Now what is the amount of dividend? Dividend is 24,000. Now we have to add tax. Tax over here. Tax is paid 3,100, and we have to add interest over here. This amount is 4,000. Now, okay. See. Now, retained earning at end is 61,700. Here it is. Then interest expense 4,800, tax charges 3,100, interim dividend 0.08 per share. So how would we calculate? Share capital is 300,000 shares of $1 each. So what we have to do, we will multiply share with the dividend 0.08. Okay. 300,000 number of shares. Okay, 300,000 number of shares because $1 each is the price. 0.08 multiplied 24,000 is your dividend. So after adding all these items, what we get the total? We get the total over here. The total would be 93,600. Okay. What we have to less over here? Retained earning at start. Retained earnings 31st December 2018 at the start of 2019. The ending of 2018 means start of 2019. That is 88,000. So what would be the profit from operations? Yes, definitely 5,400. Profit from. Done? Okay. We'll earn $5. Now, prepare a reconciliation of the profit from operation to cash from operations or cash used in operations for the year 31st December 2019. Okay. Now, here what we have to do, we have to start with profit from operations. Profit from operations we have calculated in our previous section. That was 5,400. 5,400. Now, what we have to add over here, we have to add depreciation. Depreciation on non-current asset. Now see, depreciation on non-current asset is like that. First, we have to calculate depreciation on plant and machinery. Plant and machinery at start of the year is $225,000. Okay. Any changes in plant and machinery? Yes. Additional machines costing 1,80,000 were purchased. Total answer 405,000. Okay. But at the end of 2019, we have 344,250 is the amount of plant and machinery left. So it means 60,750 is your depreciation for plant and machinery, $60,750. Okay. Now plus other non-current assets. Other non-current assets we have motor vehicles. Beginning $136,000. Okay. Then motor vehicle net book value of 7,000 minus 7,000 is sold. Okay, 1,29,000. But the ending is not 1,29,000, it's 90,000. So it means 39,000 is the depreciation of motor vehicles, which is going to be added over here. And the total would be, total of depreciation would be 99,750. Okay. Depreciation is a non-fund expense, so we are going to add it. Likewise, we have to deduct. Now here we have what we have to do. We have to less gain on disposal. Gain on disposal. How gain on disposal comes? Motor vehicle of 7,000 sold for 8,300. It means 1,300 is gain on disposal. It is going to be deducted because this profit is not generated from operations. So we are going to deduct it from the profits because that might have been included in income statement in the profit. We have to deduct it over here. Now, take all the assets, consider all the current assets. See, inventory is decreasing. Decrease in inventory would generate cash. 44,600 minus 34,650, 9,950. That is going to be added. Add, decrease, okay, that is 9,950. Done? Okay. Next, trade receivable is increasing. Increase in trade receivable would reduce your liquidity, so it's going to be deducted. 38,900 minus 49,700. 10,800 is going to be deducted. Less increase in receivables. Less increase in, that is 10,800. 10,800. We have kept our policy to keep all deducted items in bracket. Okay. Then what about next? What we have? Cash in equivalent? No, we do not consider cash in equivalent. We'll consider liabilities. Trade payable is going to increase. Increase in payable means your liquidity is increased. 20,100 minus 21,600, that is 1,500 is going to be added over here. Add increase in trade payables. Add increase in trade payables. Okay, that is 1,500. 1,005. Then, what about accrued expenses? See, other payables include accrued expenses. Accrued expenses is basically decreased. It means liquidity is decreased by 2,300. Decrease in accrued expenses. So, less decrease in accrued expenses. That is 2,000. And we'll get total over here, profit from operations. So net cash generated from operating activities, cash from operating activities, cash how much? 102,000. Done. Now move. Prepare an extract of statement cash flow for the year ended 31st December 2019, showing the net cash from or using. Okay. Now see what we have to do. What we have to do over here. Net cash tax paid. Now, students, the tax paid is like now. Tax charge was 3,100. Okay, 3,100. Okay. Now, accrued tax payable as in start of the year. Yeah, that is going to be 5,200 plus 3,100 minus 3,100. So answer will be 5,200. Tax we have to pay, or we have paid 5,000. Then less interest paid. Interest paid is how much? See in the insert. Insert will tell you how much. Interest is 4,800 and accrued is 2,600. It means we have paid only 2,200. So interest paid 2,200 and one hundred 2,200 minus 5,200 minus 2,200. The answer is 94,800. Okay. 94,000. Cash. $94,000. Financing activities. Okay, what we have done in financing activities. What we have done in financing. Now, see, class, the thing is, there's no change in financing activities other than loan. They've obtained a loan of 20,000 and they have paid a dividend of 24,000. So, financing activities would include bank loan that have generated cash $80,000 and less dividends that has reduced the cash by 24,000. Okay? And net cash from financing activities. And during a directors meeting in April 21, we have to make our shareholder happy. Even though the bank overdraft has increased its reserve, we still have to pay cash dividend for 2022 our share. Also, that this is whether or not it's appropriate for PHC to pay out cash dividend to shareholders in 2022 justified. So, if we see the position of the company, see, we have bank overdraft at 1,500, we have bank loan 80,000, we have accrued expenses, accrued interest, we have tax payables. Only we are left with share premium. So in 2020, I think if the company could not make huge big profits, he has to uh, surrender share premium against bonus shares. No option will have to make the shareholders happy. They have to increase. They have to generate cash and at any cost in 2020 by increasing their businesses profit from operations and net cash from operations. Otherwise, they will suffer and share premium will be lost. Okay. So now, question number two. Amir and Ishan had been in partnership providing IT solutions. They shared profits and losses in the ratio of 3:2. Raj had a similar business as a sole trader. Raj merged his business with Amir and Ishan on 30th June. Balances were Amir and Ishan as a partner and Raj as a sole trader next year. Now, the goodwill of the business was agreed. Amir and Ishan's goodwill is 25,000, Raj goodwill is 50,000. All Raj assets and liabilities will be taken over by the partner except cash and bank. Assets Amir and Ishan will remain at their book values. Raj asset will be revalued as well. Plant and equipment and inventory increased by 5%, trade receivable reduced by 10%. Okay. Raj initial capital would be 100,000 out of the amount payable to Raj upon the final settlement. Raj agreed 20,000 would be a long-term loan to the new partnership at an interest rate of 4% per annum. Now, in this case, what will happen? First, we have to calculate the value of business of Raj. Okay. Uh, Goodwill is done 50,000. Now, what else Raj has? Raj has that plant and equipment 50,000, but it's going to be increased by 5%. So, how much would be 53,200 multiplied by 105%? That would be 55,860. Okay, that is plant and equipment. 5,000. Okay. Now, Inventory 12,500 increased by 5%. 12,500 multiplied by 105%. That was 13,125 to the value of inventory. 13,000. Next, trade receivables is going to decrease by 10%. So 26,300 multiplied by 90%. 26,300 multiplied by 90%. That would be 23,670. 3,670. Total value of assets. Hmm, 55, sorry, 2,000 plus 55,860 plus 13,000 plus 142,655. 142,600. Okay. Next, liabilities. So what is the amount of trade payables? Trade payables is 14,950, and I think it will be taken on book value. 14,950. 14,950. Now, the value of business will be value of business will be value of minus 14, 1,27,127,070. Now, Raj, Raj capital is 100,000. So if we deduct by keeping a bracket, the answer would be 27,000. Less and loan from Raj. So payable to Raj is 7,705. 7,000. And we got 6 marks. Okay. Now next. Why I think obtaining why explain two reasons why Amir and Ishan is asking for a loan from Raj instead of from the bank. The first thing I think they have to pay 27,000, around 27,000. So if they take a loan from him, they don't need to pay immediately 20,000 to Raj. The first reason. The second reason, obtaining from bank is a difficult task. It's a time-taking procedure. And this is something easy procedure. Getting my point here. Now, C, C part. So, there is the B part. This time, prepare financial position of the new partnership on 1st July 2000 and use the space on the next page of what you're working. Okay, we have to make financial statement. Okay. Now see, before making financial statement, what we have to do, we have to make T accounts of all the partners. First partner is, his name is, I forgot the name. Name is Asim. Ahmed. Ahmed. Now Ahmed. Now in Ahmed Capital, what we have to do? Ahmed Capital. Now what we have to do? Ahmed Capital. Ahmed Capital was initially on the credit side. Was on the credit side. Ahmed Capital was balance. Balance in the credit side was 300,000. What we have to do? Balance is 300,000. Now goodwill. We got the goodwill. How much is the goodwill? The goodwill of the firm was for 25,000. Amer and Nishan. Okay. And it will be shared 3:2. So 3 upon 5 multiplied by 25, it means 15,000. Is the goodwill given to 15,000. Done? Now, after winding up, the goodwill would be after winding up, the goodwill will reduce because they don't want the goodwill in the become. Now, the goodwill is become 25 plus 50, 75,000. Total goodwill of the firm. Now, it's going to be divided in the new partnership in the ratio of, what is the new ratio? 3 to 1. This is 3 to 1. So, multiply by 3 divided by, multiply by 3 divided by 6. The answer is 37,500. So, the goodwill debited is how much? 37,000. Now, capital balance. Now, balance of capital would be 3,15,000 minus 37,500. 277,500 balance of Amer capital that is going to appear in the tier. Getting my point? Done. Now come to after Amer we have what's the name? Ishan. Ishan. Now Ishan capital. Ishan. Now, if you see Ishan capital, now balance in Ishan capital before the admission of Raj Share capital was 200,000. 200,000. Okay. Now goodwill given to him is out of 25,000 goodwill, he get 10,000. Now goodwill reduced will be how much? 75,000 multiplied by 3 divided by 6. So multiplied by 2. 75,000 multiplied by 2 divided by 6. Answer is 25,000. And his capital would be 210,000 minus 45,000. So his capital would appear in the balance sheet as 105,000. Done? Okay. Now come to Raj capital. Now come to Raj capital. Okay. Now the balance in the Raj capital account is supposed to be 100,000. Because his capital is coming up with a goodwill, so we don't need to add goodwill over here because his goodwill is calculated in is given. Only the reducing goodwill will be debited, and that is 75,000 multiplied by 1 divided by 6, 12,500. 12,500. So his balance that would appear in balance sheet will be 100,000 minus 12,500, 87,500. Done? Okay. Now move to the upper part. Now we are making balance sheet. Now non-current asset. Now non-current asset we have, I think the whole page is given. Non-current assets we have now plant and equipment 4,31,000. Okay, that is to be taken on book value. I mean Nishan assets, and his capital, his plant and equipment is 55,860. 486,860 would be the 486,860 is the amount of plant and equipment. Next item, inventory 47,200. 47,200 plus inventory of the value of inventory for Raj is 13,125. 60,325. So we put it over here 60,000. 60,000. Now come to trade receivable. Again, trade receivable is taken on book value 52,800 plus his value 2,800 plus what it cited 23,670 plus 23,670. 76,478 trade receivable. $6,000. Done. Now move to uh, just reflect level is it's a liability. Plant and equipment was assets, current asset. Oh, sorry, class. Current assets. Plant and equipment, inventory, trade receivable. We are done with that. Okay. Now come to cash at bank. Cash at bank. How much? Cash at bank. 13,600. 13,600 minus 7705 we have to pay to Raj. So how much is left with us? 5,895. Now total assets. Total assets. Total assets over here. What is the amount of total assets? Uh, 486, 860 plus 60,345 plus 76,470 plus 5895. Total assets 629 5 629 486 860 486 860 60,000. Made a mistake in the amount of payment. So 7,000 plus 60,325. I am getting okay. Now the total is 6 lakh 486 860 plus 60,325 plus 76,470 plus 5895. The answer is 629,550. Yes. Total is 629,550. Done. Assets. Done. Done. Now come to the next part, that is finance by capitals. Capitals means Ahmed, Shan, and all the capitals will be taken from the working. Working, yeah. 2,77,500 Ahmed capital. 277,500. Shan capital was how much? Shan capital was 185,000 and Raj capital was 87,000. Finance by. Okay, now long term liability. Sorry. Long-term that is loan from Raj loan from Raj is 20,000. Done. Now, current liabilities. Now, current liabilities. See, we have current liabilities. We have trade 37,300 plus liability of Raj. 52,250. Something is everything done? Cash bank capital accounts. Oh, current accounts are left. Okay. Now current accounts. We have only two current accounts. As is just one. Amir current account is 11,100 and it's positive. But Ishan's current account is debit or negative. Ishan's current account is how much? Ishan's current account is debit 6,800. If you get a total over here, it's the same like 2 pluses. 277,500 plus 195,000 plus 57,500 plus 20,000 plus 52,050 plus 11,100 minus 3,800. Answer is 629,550. Yes. 629,550. Done. This is totally this. Got it? Okay. So you have earned 12. See, I have already explained. Let's move to the next. Amir's friend Lala has just left an interested IT firm and wants to join the partnership. Whether or not Ishan Raj should admit Lala as a partner. Now, they've just merged with Raj. I think it's very early to, again, to have a merger with or to accept someone else in the partnership. The result would be larger amount of capital on one hand, but division of profit on the other hand, division of loss on the other hand. You can take the expertise from IT introduction. Now it's up to you what answer you would like to. Then we come to resource 3. No, we'll do it inshallah tomorrow. So today we have finished, mashallah, question number 1 and 2. So see you inshallah tomorrow with other 2 questions. Take care. Allah Hafiz.